Whenever a war starts somewhere in the world, financial markets react almost instantly. Stock markets drop, oil prices suddenly spike, gold begins to rise. But here's the interesting part. How do markets react so quickly to global events? And more importantly, can AI detect and analyze this market volatility faster than human traders? Throughout history, wars have had a massive impact on financial markets. When geopolitical tensions rise, uncertainty increases. And markets hate uncertainty. Investors start moving their money into safer assets, while riskier markets often become extremely volatile. Understanding these reactions can help traders see why the market sometimes moves so aggressively during global events. Wars create uncertainty in multiple ways. They can disrupt global supply chains, increase energy prices, affect international trade, and change investor sentiment almost overnight. For example, during major geopolitical conflicts, commodities like oil and gold often become more volatile. Oil prices can rise due to supply concerns. Gold can increase because investors see it as a safe haven asset. At the same time, stock markets may experience sharp movements because investors become more cautious. This is why geopolitical news often creates sudden spikes in market volatility. For traders, reacting to global events is extremely challenging. News spreads rapidly, markets react instantly, and trying to manually process all the information happening around the world can be overwhelming. A single event can influence multiple markets at the same time. Stocks, commodities, currencies, crypto. Keeping track of all this information in real time isn't easy for any trader. This is where artificial intelligence becomes very powerful. AI systems can monitor huge amounts of data simultaneously. News events, market reactions, price movements across multiple assets. Instead of manually watching every market, AI can detect patterns in volatility and highlight unusual activity much faster. This is the core idea behind tools like the TradeWise AI Assistant. Not to replace traders, but to help them understand market behavior more quickly when major events impact global markets. Because in fast-moving markets, speed of information can make a big difference. But now I want to ask you something interesting, and I'd really like to hear your opinion. When markets suddenly move during major global events, do you think those moves are driven mostly by human emotion and panic? Or by advanced algorithms and AI reacting to information instantly? Drop your answer in the comments. I read every single one, and your perspective might even be featured in an upcoming video. Because on this channel, we're not just talking about trading strategies, we're exploring how global events shape the future of financial markets.